And now for a look at what's driving the local markets, I'm joined by Byron Lotter, who is Portfolio Manager at Vestact. Byron, Dawn, they're one of the companies, well, I think the only company reported today, and of course if you're the only one you get a lot of attention. It's a relatively small company, but it's always interesting to hear the CEOs talk of what I suppose the fashionable word is granular. It's the detail of the operation, looking at what they're expecting with things like infrastructure, things like consumer spending, and how a lot of these companies are finding a way.
Yes, I mean, these guys just managed to scrape through the financial crisis. They're a very cyclical business and they nearly got taken out. I think they did a rights issue quite recently. And good to see that they're in profit. They did mention in their results that finished buildings was up 7%, so definitely something coming through in the construction sector. We saw very muted numbers from cash build, so I'm sure in the consumer area things are still slow, and the housing market is still quite slow, and they're obviously very much geared towards that. I think the housing market will pick up. We saw how long it took in the US for that housing market to turn. It's only started now, and the recovery's been going for 3-4 years. So it's something that takes its time. But I think, you know, if I had to invest in the construction sector, I'd definitely be going with the suppliers rather than the actual builders. You know, when you have a look at what the margins are doing and collusion and so on, it's really tough building. But supplying to the builders is I think, got better prospects going forward.
Yeah, and also if you look at cash build, you mentioned that, I mean, 2% increase, I think it was, for earnings. That's the worst in a decade, because those guys just used to keep going right through the recession. So even though they are doing okay, it's tough.
Yeah, I think what I've picked up looking at all the retailers is that the lower LSM group has really struggled. And Cashbuild are one of the only companies that aren't diversified through the LSM groups. They're mainly focused on the lower LSM.
Which did very well for them through the social grants for a long time.
Exactly. So, I mean, it's been a rough patch. Obviously, inflation affects the poor more than anyone else. Yeah. The weaker rand has had a lot to do with that. And that's what's hit Cashbuild quite hard. But I think the long-term picture is still looking very strong. Like I said, I do think the housing market is going to turn. We're still seeing a lot of government spend on infrastructure and on housing. So we're going to see that start turning, and hopefully that 830 billion rand will start getting into the market.
Yes, we keep hearing about these huge numbers, and it's been nice to see them spent. Yeah, I want you to talk about the rand in a moment, but other corporate news today, no results, but famous brands, and we've talked before about how they grow regardless, whether it's by acquisition, organic and so on. Off to India, vast market. Debonair's Pizza is the vehicle that Kevin Hedderwick, the CEO, has clearly decided that's the appropriate one for there. Based on his record, it's going to succeed.
Yeah, I mean, it's an interesting decision. Obviously, they're going to be competing against a lot of street vendors there, and pizza in India just doesn't really...
No, it doesn't seem to work, does it?
Maybe they'll put some Indian flavors on the pizza. I'm sure they'll adapt
pizza,
there.
Curry pizza.
Exactly. But yeah, you've got to back them. I was a bit surprised by the move, because they've still got so much room in sub-Saharan Africa, which is just, you know, around the corner. Why go all the way to India? But they're only starting with 5 stores, so I guess they're just testing the waters.
But also, Hedderwick, as the chief executive, and the culture of that company is to do both at the same time. I don't think he's going to India at the expense of Africa. No,
not at all. And he famously said that when GDP grows, the fast food market grows at twice that speed. So if India's growing at 5-6%, they can grow sales at 10-12%. And that's just same-store sales. So if they're starting to get market share and you know, offering a product that no one else is, then maybe there's a lot of room for growth there.
And then we had an announcement from Vestact. Most interesting, the senior team in Vestact Asset Management wanting to buy 15% of Vestact, as I understand it, led by Hendrik de Tooy, one of the most respected fund managers in the country. Lots of big numbers there. 180 million is million pounds we're talking about. So we're looking at R1 billion. And each of those managers, I think there are what, 20 or 30 of them?
There's 40
of them.
So it's £4.5 million per manager. I'm sure it'll vary. It's not Vestact as a whole, it's just the asset management business.
So they're buying of the part that they run.
Exactly.
Becoming shareholders.
Yes, so essentially current shareholders will be diluted out of that position. And then those guys will get 15% of the profits that they make. So I guess their interests are going to be aligned with the business that they work in. Interesting to see that it's not they're not getting whole Vestact shares. And I understand where that'd be coming from. They probably negotiated not to get the entire part of Vestact, because the asset management part of that business is really the lucrative side.
Well, and in their statement that they put out, they make that clear. the banking side and the normal sort of activities, that doesn't look so good. Some of the guys in this studio have been very critical of that. But as you say, the asset management side has been the star.
Yes, 2-3 years ago, they mentioned, Stephen Kossoff came up and said, asset management, that's where we're going to start pumping our business. And they really have been pushing it. They've even made a few acquisitions there, and they've brought in a lot of money, which is great to see. And that's why the business has done so well over the last year, because markets are up. Yeah. Two things happen when markets are up. Of course, your assets under management will grow with the share prices, but also people start talking and they say, oh, look how well I've done at Vestact. So they start bringing in more money, and current clients will start sending more money because they've done well for them. So it is a bit of a multiplier effect. But as an investment point of view, us as asset managers, why would we want to allocate money into something that's going to follow the market when we're trying to beat the market? Yeah. We back ourselves to allocate money into better investments.
Certainly it looks good for those managers. It remains to be seen how good it is for everyone else. Just a quick final comment on the Rand. It went to 9.25 today. People are beginning to talk about it. Is this another one of those periods where the Rand suddenly breaks out and maybe there's panic?
Well, I know we mentioned off air earlier when I think it was 2010 when the Rand was trading at 7 Rand, and everyone was like, it's going to stay at this, it's so strong, it's never going to get weaker.
They always say that.
That's how it happens, and I guess people or speculators are going to try to ride that wave and see how much money they can make, and then slowly we're going to see it start turning. Obviously, it's got to do with the reflection of the economy and all the stuff that we've seen, labour disputes
and things so particular to South Africa, not to emerging markets generally. I think the commentators are all saying that. But bad for inflation, bad for the poor, bad for pensioners, because it's a tax on poor and pensioners, inflation.
Yeah, I know, it really is going to hit us hard, and it also limits the Reserve Bank from being able to cut rates because inflation becomes such a big issue. So that's going to hamper growth. It's the labour unions have been calling for a weaker Rand for so long, trying to push that manufacturing sector, but we can see directly now that it isn't as good as everyone thinks it is.